Hello traders, I'm Dennis Dick.
And I'm Joel L. Connon. Welcome to the Pre-Market Info Special Report.
AEP and NEE. Two utility stocks lose more than 50% of their value here this morning, then rebound entirely seconds later, and all trades, what? All trades stand?
Dennis, I know you're joking because utility stocks are the most stable stocks. They are trading very narrow ranges and they just don't have that kind of volatility.
Well, they did off the bat here. I'm going to show you the tail of the tape here too in the AEP. We opened for trading at 48.45. As you can see here, this trades actually right after it opens. It's trading actively between 48.35 and 47.71, but then all of a sudden just tanks all in the same second. We fall. You can see the price just falling here all the way down. 46s, 47s, 45, 44. I'm scrolling through all the trades. 44, 43 handle, 42 handle, all in the same second. 41 handle, 40 handle, 39 handle, 38, 37, 36. Oh, now they're going fast. 33 handle, 32 handle, 29 handle, 28 handle, 27 handle. I'm missing a few trades here for some reason, but all the
Right.
way down. Joel, what do you have for a low on that?
Well, it's funny, a stock trades like this, a major stock on the New York Stock Exchange, and me and you were disputing what the actual low was on my TradeStation platform. I have it trading down to 22.28. You're
I'm
theorizing that
showing
some of the yeah.
27.01, but there's actually a Bloomberg article that's saying the same thing, traded down to 22.28 Either way, the stock lost more than 50% of its value in the opening second here today on a utility stock that typically doesn't even move.
So what happened?
And then it's right back at 48. So literally the next second it's trading back up at 48. What you had was a huge order come in on the NYSE to sell the stock, and there just wasn't enough liquidity on that specific exchange. Although there was liquidity on other exchanges, those orders got traded through. What that means is basically there's a rule basically that protects the top of the order book, but doesn't protect the depth of the order book. And what is allowed to happen is orders can bypass orders on other exchanges. So you can get a huge order that's selling just on NYSE. It can bypass the liquidity on the other exchanges and trade through down to ridiculous prices. And that's kind of what happened here this
Aren't
morning.
there rules against this sort of
Well,
thing
there's
happening?
circuit breakers are supposed to kick in and stop this kind of stuff. And the NYSE, we got to give them some credit here because the NYSE has had this liquidity replenishment point circuit breaker for years. They've had that. So basically, when a huge order comes in, and let's say the stock, and it's the LRP they call this, and it's different for each stock, the LRP level. It floats around where the current price is, usually a percent or two down from where the current price is. So let's say the stock has a huge order, stock falls 2% very quickly. It would normally hit the LRP, then the designated market maker on the floor would step in. So when it hits the LRP, it actually halts trading on the NYSE for a split second. Designated market maker on the floor steps in to provide liquidity to that incoming order. But what has happened now is the SEC has actually asked the NYSE to get rid of their LRP circuit breaker system because they're going to this limit up, limit down circuit breaker system across all exchanges. They want to get uniform circuit breakers across all exchanges. But the limit up, limit down is still in just, it's in phase one right now. And phase one doesn't cover the first 15 minutes of trading and doesn't cover the last half an hour of trading. So basically, stocks can just kind of fall to zero like they did last week. Which stock fell to zero last week, Joel? Do you remember the symbol there? Remember it went down to .01. I'm trying to remember.
It was APC,
Yeah,
Anadarko Petroleum, right?
exactly.
Right. But so what you're telling me is that there's limits on the S&P futures,
Yep.
okay, and on the open and also throughout the day. There's limits on your commodities and gold and silver and crude and whatnot. But where the people in the United States public has most of their investments, there's no circuit breakers or no
Well, there
protection
is,
within.
but not right now. So there was protection on the NYSE with this LRP, but now they don't have it. So we're kind of in between phases right now as they're going to this limit up, limit down. It's not fully phased in. So right now there is no protection right off the hop in certain equities, and that's what you saw happen here today as AEP was allowed to fall 54%, rally all the way back up a second later, and the people, and this is what the really crazy thing is, these trades stood today. Reading the report there from the NYSE saying there the trades will stand, but they're going to be marked with an aberrant report indicator. I've never heard of this one before.
They made up a new one
I've
there,
never
huh?
heard of this one before, and they're going to be not on the tape, so they won't show up in charts. They won't show up as the high or the low, but those trades stand. So the people that actually sold the stock down there are just screwed.
You know who
So
gets hurt? You know who gets hurt on this kind of thing? The American public.
it does,
Anybody,
man.
and I can't believe that anybody that has a stop in there, because you know they're going to get filled at the worst
Oh
possible
yeah.
point. I mean, I think that you have another similar Facebook incident coming up where there's going to have to be some kind of retribution for this. I mean, it's just not right. There were probably some huge stops there that got triggered to the low of the move.
Yeah, and that's why you can't use stops in this high frequency trading world because things happen very, very quickly. Liquidity can vanish, and we've talked about this for a long time on our show for the last 2 years. There's very little liquidity in the first 5 to 10 minutes the first 2 minutes of trading. There's very little liquidity on any of the stocks because market makers don't really know where the price is going at. The high frequency guys don't want to risk, so they don't make markets. You don't have traditional market makers really anymore, so it's kind of just a lot of vacuum in the stocks in the first couple minutes of trade. And now all of a sudden, we don't have an LRP or circuit breaker system on the NYSE, and you can see stocks trade all the way down to zero. Actually, the NYSE, we got to give them a lot of props for this because they warned the SEC. They said, we do not want to get rid of our LRP program. But the SEC said, no, we want uniform circuit breakers across. You need to get rid of your LRP circuit breaker system because we're going to go to this limit up, limit down. So either way, it's just crazy. But I don't understand why the trades. This is what I don't understand. I don't understand why the trades aren't busted. There's like clearly erroneous rules, and these trades look pretty erroneous to me. Being when stocks are allowed to fall 50% here. Just looking at the NEE tape now, Joel, scrolling through it, and you can see the stock goes from 78, 76, 71, 70, 69, 68,
Yeah, it goes
67.
right back up. And just to put this into perspective, since that time, AEP, since trading down at 22.28, has traded in a range from 47.68 to 48.02.
40-cent range.
Yep. And then NEE was traded down to 30.37. Since that time, has traded in a range between 77.82 and 78.30. But just, and correct me if I'm wrong here, what the SEC is trying to implement and make it uniform across all exchanges, what the problem is liquidity is not uniform across all stages. So there's no way that the proposed rule is going to work, because if a big order comes in on one exchange, that's going to be the exchange that triggers everything.
Well, and that's why they're trying to go to this limit up, limit down thing. So they're saying, that if it goes down 10% on any exchange, it'll halt trading on all exchanges.
Okay.
So that's what they're trying to address here. But the biggest problem is that it's not fully implemented yet. So it's hard when you don't have the protection in the first minute of trading here when we're looking at this, or the first 15 minutes of trading right now. They are going to get it fully implemented. Maybe after that, maybe it works, maybe it doesn't. But the NYSE had a good system. They have the people still on the floor that were capable of coming in and doing this. The other exchanges don't, because they don't have humans mostly on the other exchanges. But the NYSE still does have some traders down there on the floor, designated market makers, that could come in and provide liquidity to these orders and print these prices at a reasonable price instead of watching a stock fall 50% and then rebound a second later. It just seems crazy, and it does hurt the investing public, Joel. You're exactly right.
Okay, so what should our investors take away from this? I mean, we don't mean to strike, on fear, but we just are, want to alert, especially any investors that got a sell stop filled in either one of those stocks. I mean, you get on the horn with your broker and you express your displeasure.
The number one thing, don't use stops in this high frequency trading world because it just happens too quickly. Use mental stops, but using physical stops, having those orders out there on the book, they can sometimes, some stuff like this can happen and get triggered. And imagine if you were an NEE shareholder, you were up $5-7 on it, you had a stop in at 70, you just got executed like 50 or 40 or 35 on that stock, and then you open up your account, it's back at 78, you'd be like, what the hell is going on? So don't. That's the main thing I would say is try not to use mental stops. Don't use the physical stops. And the second thing is you've got to be careful in the first few minutes of trading because funny things can happen. So don't use market orders either, because if you were using a market order, just happened to send a market order during this exact time this was happening to sell, you probably sold it at the bottom too, and you're probably down 50% on your investment, or you've lost 50% of your investment. And that's a sad thing. It's sad when investors are losing because of market structural issues.
Okay, folks, that's our breakdown of the trading action in AEP and NEE today. If you have any questions, please email us at info@premarketinfo.com.